Is let's get cracking with today's breaking Bitcoin market update. In today's episode, we're going to cover what's going on with Bitcoin, how high we can climb, and what are the best opportunities to profit in the bear market. We're getting started right now. All right, loving it. Welcome everybody to another fantastic episode of the Breaking Bitcoin Market Update brought to you by Kraken Cryptocurrency. Hopefully everybody watching today is doing absolutely fantastic as we continue to undescend to actually ascend from the bowels of El Diablo here in the depths of the cryptocurrency bear market 2022-2023. Third such cycle for us loyal viewers. How are you guys doing today? Let me know in the live chat. We've got a lot to talk about today. In today's video, we're going to be doing some recaps from the premium mentoring session that we just did in the trading and investment group. We're going to go over current price action. We're going to go over, obviously, the weekly chart down to the daily, look at opportunities on the hourly here with Bitcoin. And then in attendance, we're going to go over some pretty sage ideas that our members had to share in the mentoring session that I think are very critical for us to consider as we move forward. What are the big catalysts on the horizon for cryptocurrency? How high could we possibly go? And how low could we possibly go? If that's information you're interested in, stay tuned because it is coming to you hard and fast. All right, starting off as we are wont to do on the weekly time frame, let's slow it down with a little bit of our weekly trend, take a big picture look at where we are, where we've been, and where we are likely to go. We remain in a bearish market regime with current price action showing us consolidation. Last few days have been exciting. We have seen some nice up candles from Bitcoin, but keep in mind we are still in a bearish market regime, meaning the highest possible conviction plays are looking for opportunities to reshort at the most opportune price, at the highest price we could possibly get, because that is what the large players are doing. Still looking for exit liquidity, still looking for new retail investors to dump on. Sadly, that is the way the market works, unfortunately. Anyways, we do have significant resistance overhead in the form of our 21 weekly exponential moving average, also our Tenkan-san leading line from the Ichimoku indicator. Of course, we are using the Kraken cryptocurrency exponential moving averages indicator as well as the Kraken cryptocurrency Ichimoku indicator. Of course, you can use whatever you like to determine your trend direction and trend strength. We prefer these. Moving right along, 21 WEMA Tenkan-san leading line overhead that's coming in at around 19,100, which means we still could wick up to that level on a weekly basis right here, travel up, wick to those levels, and then still close the weekly down below that level, very similar to what we saw over here right before the news of the FTX collapse came out and hit the market like a sack of bricks, pushing us down 22% in the span of a week. And that is how bear markets work, ladies and gentlemen. It is stair steps up, escalator down. People say that that occurs in a bull market, but not necessarily. Stair steps up, escalator down. All the gains that are put in are violently wiped out because selling fear is irrational, whereas greed is a bit more rational. All right. It's, if you know what I'm saying, greed is greed is more rational than fear. Yes, people are far more logical when they act in a greedy fashion than when they act in a fearful fashion. All right. Take that one to the bank. All right. Moving down to our weekly reversal opportunity. So again, what's the summary here? What is the key takeaway? We're in a bearish market regime. We are not currently in a bullish trending structure. Therefore, ideally, the trades that we should be looking for on lower time frames should have a bias toward looking for opportune moments to short when price is high. And the only contrariness to that will be the potential kind of big picture higher risk trade that we'll be talking about in just a little bit. Switching from trending to reversals. Is the market oversold, overbought? Is there an optimum moment of entry? We do actually notice that we are still currently printing regular bullish divergence. The last time we printed regular bullish divergence was back in March of 2020. This was the BitMEX meltdown. I don't know if many of you guys were online at that time, but essentially the BitMEX liquidation engine went haywire and tried to crash the entire market. In that situation, price made a lower low while our momentum oscillator made a higher low. and signaled a beautiful bull market to come. That was essentially the last possible buying opportunity before the bull market really took off into the summer of 2021, where we had an abrupt negative 50% movement. Now, don't get too excited when you hear me say that, because that doesn't mean we're out of the woods yet. I do not predict at all that we're going to experience something similar to that, because we haven't gone through the long necessary consolidation that we need to see kind of that final capitulation at the end, and the consolidation that we need before a new bull market can be rebirthed from the ashes of our current bear market. Now, why is it structurally different? Why do I not assume that that is what's going to happen? The reason why is because if we look at when that happened, March of 2020, we had already been down into the depths of the bear market, had a long consolidation period, put in a very convincing rally, and then failed to go back down to that low. We failed to go anywhere near that low. So if we were to see something like that, it would not be here, because we just put in that low. We have yet to go back anywhere near that low. And essentially just the market structure is different. We need that long period of consolidation and then the exhaustion before we can see that kind of final opportunity to buy. This is also a pattern in Wyckoff market structure called the last point of supply, the LPOS as well. So definitely bust out your Wyckoff chart because they are very helpful in determining ideal entry points in market structure situations such as these, as we are wont to do. Kemozabi. Shout outs to everybody in the live chat. I do see Alex81SG, Starman Jack, Kemozabi, and Jack. Hello, long lost friends. Indeed, indeed. Good to see you guys. Hopefully everybody is doing well. Okay, so regular bullish divergence. What does regular bullish divergence really give us the opportunity for? It does give us the opportunity to kind of take high conviction plays to the upside. All right, high conviction plays to the upside. So where is our previous high here on the weekly time frame? Well, our current previous high is sitting around 21,678 and slightly above that, about 25,000. We had a member of our premium trading community mention, of course, the confluence there between that high, this high right over here, this lower high, and of course the 200 exponential moving average on the weekly time frame, which if we switch back to our trend detector and I quickly enable for us with this button right here, we're going to see that confluence right there. And of course, the 200 weekly or 200 daily simple moving average is a very tried and true ancient investing tradition. Where if price is below it, we're in a bear market. If price is above it, we're in a bull market. It doesn't really work quite that cleanly in cryptocurrency, particularly on the daily, but it's close enough. All right, it's close enough. So coming back up to that area, kind of retesting an area of supply from below would potentially be the area. And basically the theory that was postulated is that, okay, we've got regular bullish divergence. We just had the FTX collapse. Everybody's afraid to buy cryptocurrency. This is likely the moment when we're actually going to put in a pretty big pump. That would be a 40% pump from current price up to the 200 simple moving average. And then we drop the bottom out and drop down to 12 to 13K. Why do I say 12 to 13K? Well, let's take these indicators off and let's throw the VPVR on. And if we throw the VPVR on, and you can see it on Bitstamp, you can see it on Binance, you can see it on any long-term chart that'll go back to at least 2018 with the VRVP, the volume profile, or the visible range volume profile, excuse me. We can see that we have a very large shelf of low liquidity, a very large low volume node directly below us. Low volume nodes occur when price has not traded in an area for very long. And what that indicates to us is that that is an area of the market where traders are not in firm agreement that that is a fair market value for Bitcoin. When Bitcoin has been there, there was a violent disagreement that this should be a good price for Bitcoin. Whereas if we look at areas where price has stayed a long time, those are areas that at that moment in time, traders in general felt that that was a fair price to exchange Bitcoin for cash and vice versa. So all that relates to back to practical trading is that high volume nodes tend to compress price. Price tends to hang out in high volume nodes for quite a long time. And low volume nodes tend to rocket price along like it was greased lightning. And interesting enough, we can actually see that we are breaking above a high volume node right now, this period of consolidation that we've been in for about, 2 months, which could, if my theory is correct, be transposed violently through all the way up to about 19,100, which is exactly where we see our resistance coming in with our exponential moving average and our Ichimoku indicator. So I would expect a pretty nice move up to 19,100. At least that's what I'd like to see here on the weekly time frame, letting that regular bullish divergence play out. And maybe even after a slight pullback from that, more violent charge up to that 24, 25,000 would be very logical, would be very understandable. And then what, depending on the rejection that we see at 19,100, positioning short from there, which was my original game plan. And so I think that's what this is actually going to look like in practice. If you guys want to know what the game plan is going to look like in practice, it's going to look like that. It's going to look like longing up to 19,100, looking to opportunely shift short at that level, seeing what the rejection looks like. And then if we do get a pretty significant buyback, it's going to be dropping the short in profit, switching back long, riding back up to 24.25, switching shorts for the big trade of the first half of 2023. I mean, the big trade, and then taking that down to about 12, 13,000 if we do descend that low for the end. And then again, very similar situation. If we get up to 24, 25,000, price pulls back, we see a violent buyback and price starts charging up, we drop the short and we go back long again. You just have to be open to being wrong, open to changing your mind and willing to shift your position and gradually entering into your position and not kind of throwing all your eggs in one basket. And you can manage more profound positions like that. And in the meantime, we continue trading our objective, if this, then that daily time frame strategy, racking up the bullions. Daily time frame shifting down, we are trading above the 13 and the 55 DEMA. We are now approaching the Kumo cloud from underneath. A breach inside would set us up for that nice edge-to-edge trade up to where, oh my God, it's almost like technical analysis works, 19,146. So all this confluence, and that's also, by the way, where the 200 daily simple moving average will likely be in the vicinity of here in several weeks. That it's going to take us to get up there. So very nice confluence there. We can, of course, see a pullback here. My ideal pullback here would be anywhere like a rejection here down to the 55 DEMA would be very logical to see. And then seeing those rising ascending moving averages act as support for price and pushing us back up. That would be very logical, very nice to see. Let's go and look at daily reversal opportunities. Are we overheated here on the daily time frame? Not really. Again, remember, we are trading above the Bollinger Bands now. So eager traders would be like, well, we should short. We're above the upper envelope of the Bollinger Band. Yeah, but here's the thing. We've had this Bollinger Band compression for quite a long time now, for like over a month and a half. About a month. All right, excuse me, about a month. And when you compress price so tightly, the expansion following tends to be quite violent. So I actually think we even stand to completely shatter through this channel. Of course, again, this is like basically right where the Kumo cloud is, directly just a little bit above it, about 18.1. So about $500 above where we are right now. So we could still see us tapping that channel, that pullback, and then the buyback back up. We also aren't severely overextended to the upside. Our momentum oscillators aren't overbought, kind of close, but not quite there. And we're also just now starting to get a slight warning sign from the Glare PPO. So nothing that I'm overly concerned, nothing that I'm overly excited about. Shout outs to Mr. Ether Robert Warner. Let's see here. Kimozabi asking about FBTC. Let's take a quick look at that once we're done with Bitcoin, my good friend. And we are almost there because we're not doing we're not showcasing the PTP strategy on the channel anymore because I do want to keep that exclusive for the premium members. And let's go down to the 4-hour time frame and see what we got going on here. 4-hour does paint a slightly different picture and is kind of warning that we are getting set up for a little bit of a pullback here. Notice that on the 4-hour, our momentum oscillators are overbought, are a little overextended. Of course, we've been continuing to push up even while our momentum oscillators have been extended, but we're starting to see regular bearish divergence here, putting in higher highs in price and lower highs on our momentum oscillators. And again, sometimes that can go on for quite a while, but it is that early warning sign, which is why us personally on the daily time frame have already taken 80% of our profits on our daily long trade. We still have the weekly long position held open where our first TP is up around 19,000. And we're just going to chill and keep it nice and steady like that. So you can use either that you want. You can either try to preempt either the short trade or the full profit taking here on the daily time frame by looking at these warning signs of this regular bearish divergence. Or you can wait for some triggers like our momentum oscillator going back down below the overbought threshold, or price trading up above the Bollinger Bands again would be a good one. We are getting some severe warning signs here from pre-PM Laguerre. So again, you can either take that early warning sign or you can wait for the slight shift. Just remember that if you wait for confirmation, you always will get a slightly worse price, but at the benefit of confirmation. So as we say. That's about all we got for Bitcoin. Nice, short, sweet, to the point. That's everything you need to know. Let's go and look at Kimozabi's request. He would like my take on Ethereum Bitcoin. He has a target of 0.1 or 10% ETH to BTC valuation. Do we have any confluence there? Well, let's go over to ETH-BTC. Binance Weekly. All right, let me just feast my eyes upon this for a little bit. Tell you what I think. All right, first things first. Ethereum Bitcoin is in a bullish trend. We had a hell of a breakout here starting in March 2021, and then we've essentially traded in this very large channel, right? There's been lots of really good weekly trends within this entire price range. A very tradable thing, exchanging Ethereum for Bitcoin. So again, kind of a very nice classic way to stack your sats, right? Like this is the classic, like, you know, ETH BTC way to stack sats. Honestly, I'm not going to lie. It was the Ethereum Bitcoin market that really made trading cryptocurrency what it is today. I mean, Bitcoin trading was cool and all, and while that is still pretty much what I do, Ethereum BTC, once that became a thing, was a huge game changer. Okay, because it gave people options. Options are good. Change is good. Variety is the spice of life. Okay, so we have a bullish trend in many different ways. We are trading above all of our major weekly exponential moving averages. We do have pretty decent and significant support here in the form of the 55 WEMA. We've only had one big divergence, which one might even say, looking at Wyckoff structure, would be an LPOS. I don't think how do I put this? I don't think that Ethereum Bitcoin currently looks poised to break out. And I could be wrong about that, but just before I really look at the technical, or before I start pointing out the technicals here, I want to just kind of like make a plea for rationality here. And I could be completely wrong, but this is just how I initially view the situation, and then we'll try to poke holes in my thoughts. In situations like this, when we are looking for fresh capital to imbue the cryptocurrency markets with fresh bullishness, the majority of individuals of retail money is going to go into the most easily accessible and widely spread option, which is Bitcoin. More people know about Bitcoin than they know about Ethereum. So if we're looking for retail money to really propel another cryptocurrency bull market, it's probably going to start with Ethereum. Now, or excuse me, it's probably going to start with Bitcoin. Now, oh, my little sound effects aren't working. That's odd. Let me just double check that real quick. Huh. Weird. Anywho. Thinking. Yeah, because we saw, and then here's the other thing too, right? Like this is one of the three catalysts that I'm going to be pointing out here in a little bit, and full credit goes to Alex81SG here in the live chat, because he was actually the one who sagely pointed these out. But we're going to be having a lot of Ethereum be unlocked within the next quarter from the Beacon chain. And that's a pretty significant catalyst to consider. We do have a similar catalyst in the form of the Mt. Gox Bitcoin, of course. So that's kind of a tough one to analyze. But just things to consider. But anyways, let's look at what we're doing right now. All right, so Ethereum to Bitcoin anyways has been trading in a compressed channel, not really able to move away significantly from its moving averages, except for these like mini trends. So nice, very tradable, but tradable in a different way than we would trade when we're looking for like kind of set it and forget it, right? Like buy and hold it. You know, this thing is pretty whipsawy, so you do need to be on top of this and trade this like a trader, going long and short ideally, or just looking for the opportune times to go long. But above and beyond all that, nice bullish trend. Our slower EMAs remain above our longer EMAs, and we are trading firmly above the 55 exponential moving average. So first key level of significant support here at about 0.069. So let's just call it 0.07. So about 7% valuation to Bitcoin. Looking at a price target of 10%. You dirty bird. You are looking for a big, nice boomer here, aren't you? Let's see. Let's think here. What were the previous catalysts? So May 2017, massive cryptocurrency run. January 2018. That was altcoin season. Those were the last two things that propelled Ethereum up to those two levels. So the last two times that Ethereum was successfully able to reach 0.1 was during the run up to the most massive cryptocurrency, the second most massive cryptocurrency bull market we've ever seen of all time. And then altcoin sneezing at the beginning of 2018. So one could make the argument that we would need a third such, and look, cryptocurrency bull run of 2021, we didn't even get close. So there would have to be, in my opinion, something pretty fundamental for price to break up and above its current consolidation pattern. Now, having said that, let's go take a look. Let's having said that, right? Typically, if price remains in a nice trend and things continue moving up, it takes rejection for things to start moving down. So as long as we can stay above 0.07, things will be relatively good. Maybe we can do it. Let's look at a couple other data points here for you. Yeah, I mean, and I wouldn't even say that the weekly Bollinger Bands are significantly compressed. So I would say not Confluence. I'm not saying anything negative about your trade. I don't know the future. But I don't see weekly Confluence. But let me see if I can't help you out on the daily time frame where I make money. Let's go to our daily trend detector. See what we got going on. So pretty nice. We just had a nice Kumo cloud break. And we've got pretty good momentum here on the daily. And we just took out a lower high. So typically after a lower high, we would expect to see a pullback after this break. And I wouldn't really consider this that. So I would be interested to see if price can pull back here to about to 0.075 and hold. Then we start moving for this higher high right here. We see if we can't go take out 0.08 basically. And once we take that out, we would expect a pullback, and then we would try to make a run on 0.085. So pretty good. Let's see how extended we look here on the daily. Not too bad. We're not yet in the danger territory. We did just get a little overbought on our momentum oscillator, and we are right at the threshold of being overbought on the PPO Laguerre. And we did just breach the Bollinger Band. So yeah, I would say maybe a couple more days of up. If Bitcoin continues to move up, it'll likely continue to move up, which sounds paradoxical, but this is moving up while Bitcoin is moving up. So that implies that Ethereum is receiving more money, dollar for dollar wise, and then BTC. Otherwise, Ethereum BTC would be going down. So maybe another day or two of upside pullback to that daily break, excuse me, to the daily Kumo cloud. Looking, or why can I not operate my computer? Here, about 0.75. And then depending on what Bitcoin does, look to relong that. And my next target would be this previous high, 0.8. Bam. Yeah, you absolutely got it. Andrew Munn saying ABC pattern down to 0.75. Hey, what? It's like we're seeing the same thing, man, in different ways. Andrew Munns, master of the 1 minute chart. Everybody, ladies and gentlemen, good to see you, my brother. Hopefully you're doing good. Okay. Listen, so yeah, we're keeping these market updates short. That's right. Thank you, virtual assistant. Nice. Okay. I know you did. Yeah, I just looked over and saw it. Or maybe I saw it all along. It was just copying you. We'll never know. All right, guys. We are going to now, give me 1 second here. Here it is. And I will be scrolling down and clicking on this. I'm going to show you guys two things. I'm going to show you my little passion project that I've been working on for the last several weeks now, which is almost done. Thank God. I've got to get back to the grind. I'm not going to lie. And then we're going to talk about number 3 of the 5 mistakes that I see cryptocurrency traders make all the time, which I highlight in my new guide, which you guys can get absolutely for free. First link in the description. Tell your friends, your family, tell people you don't even like. Okay, so first, show you guys, and hopefully my mic doesn't get all weird this time like it did last time. So everybody has heard about the LastPass breach incident. LastPass was a password manager I've been using for the last several years. They recently were massively hacked and had basically the vaults of I don't want to say necessarily everybody, but a large swath of their customer base had their vault stolen. The way that this actually happened was that back in, I believe, April or October, I don't exactly have my dates right, but the hacker, some malicious attacker did gain access to LastPass's cloud server. They weren't able to get any passwords or customer information at that time, but they were able to get some administrative information that they used over the course of 3 to 6 months to socially engineer a developer. And then they were able to use his login to get access and download encrypted backups of LastPass customers' vaults. Now, that information is encrypted 256 AEP, and that would take a very long time to crack, but we have to assume that many individuals don't have the most secure master passwords. What this means is that any password that you have in a LastPass vault, you should go out and change. And because a lot of people are losing faith and trust in LastPass, regardless of the fact that they might make significant security improvements, many people are looking for alternatives. And the alternative that I have chosen to go with is Bitwarden. Now, Bitwarden, unlike LastPass, is open source, meaning it's publicly auditable code. And all of my cybersecurity nerd friends have given Bitwarden the stamp of approval, which is good enough for me. Now, I set off on this journey because Bitwarden does offer the same features that LastPass does. You can pay the $10 a year, get your cloud access. They manage everything for you. It's on their server, blah, blah, blah. But because it's open source, they allow you the option to actually run their software on your own server, meaning that you now have self-custody of all your password information secured behind the protection of Bitwarden software. Now, this is not an easy task to chew on because stepping out into the world of cybersecurity, if you know nothing, can be very challenging. Because remember, just like self-custodying your own Bitcoin, you are now in control of your money, and that can be a scary thing because if you make a mistake, you can lose your money. Same with your passwords, right? Most individuals don't have a basic understanding of how servers work, but here's the thing, and this is one of the reasons why I really decided to dedicate time to this. We've already moved, we're into a new digital age where things like ChatGPT are completely going to be changing the game for the way we live our daily lives. We already have technology, the internet, all of this stuff I'm streaming to you through this computer here. It's completely changed our lives, and it's really not okay moving forward to not have a basic understanding of how servers work, of how information is transmitted across the internet. Ignorance is not bliss in this case, okay? Because the more you know, the more dangerous, the more powerful, the more you can do, the more options you have. And this guide is designed to give people options. So I wrote this, I set out on this journey. Could I, who knows little about setting up and securing my own server, I know probably more than most people, but little relatively, could I, as a complete beginner, set up my own secure Bitwarden server? And I did. It took some help. It took a lot of learning, took a lot of guesswork, but I've now put this guide together. This is going to be a free open course on our website. It will walk you through absolutely everything you need to know from step one, whether you know absolutely nothing about cybersecurity or you're a systems administrator. We'll walk you through everything you need to do to set up your own server, register your own domain, install all the required software you need, how to securely configure everything so that not only that it works, because I came to find out that that's one of the difficulties of running a server, making sure things work properly, and doing it in a secure fashion. So this will be published within the next week. Very excited about this. And then I will be recording a YouTube tutorial on how to do this whole process as well. And I've now verified that if you follow all the steps, all the instructions in this guide to the letter, it will work 100% correctly all the time. So pretty proud. Hopefully you guys enjoy this. And again, this will be a free and open course on the website, so you guys can go grab this. Now, the other thing that we're going to be talking about is going to be and we'll let that load while I switch over here to the DSLR. Thank you, Wook Chewy. The other thing we're going to talk about here real quick is, of course, going to be the number 3. We've been doing a section piece this whole week on one of the 5 mistakes that I see traders make. I've been spending the last 5 years of my life now trading professionally and mentoring individuals in how to trade the way that I trade. And one of the biggest mistakes that I see traders make is mistake number 3. Of course, you guys can find all this information in my free guide. I just put this out. You guys can go download this completely free. 5mistakes.crackingcryptocurrency.com. It's the first link in the description down below. Just click this button right now and it's yours. And the third mistake that I'm going to touch on here is time frame. So in the previous 2 streaming sessions, we covered the first mistake being schedule or lack of discipline, and the second one being what you trade or asset selection, which, by the way, I have a great YouTube video on what assets should I trade, the ultimate guide to optimizing your market selection on YouTube, completely free. Go check that out. It's a very long, in-depth course taking you through what markets you should trade and what strategies you should use to determine what to trade based on what your trading and investment goals are. So the third mistake here that I see people make all the time is time frame. I see this so much, and here's why. Let's talk about this. Multi-time frame analysis is a powerful and important tool that you want to baby step your way into, but it's not the first thing you want to start doing. Why is this? Because when you begin as a trader, the first thing you need to do to become a consistently profitable trader is build a mechanical strategy. Because you as an outsider, or excuse me, you as a beginner, if you are not consistently profitable, do not, despite what you may think, possess the necessary skills to stay on top of everything and to properly intuit the market. That only comes after years and years and years of experience, of trying, of struggling, of testing different things, of just learning how the market works. You learn it through experience, through putting hundreds of hours into the market. You can finally reach those levels of intuitive trader, which is the kind of final step, and then discretionary trader being the next evolution after a mechanical trader. But I have mentored thousands of students over the last 5 years, and I can tell you to a T, the traders who decided to forego the flashy things and focus on building an objective mechanical strategy are still here, still consistently trading. We have an amazing community of people at Kraken Cryptocurrency, and it's been a pleasure to watch so many individuals, young, from different places, optimize their life, optimize their trading results, and optimize their trading strategy and get great results. And they did it by focusing on what matters most, by becoming a mechanical trader, building a system that you follow mechanically like a robot, and then from there, learning the experience throughout time to begin trading discretionarily. That is the pathway to profit. So because of this, one of the big mistakes that I see people make is time frame hopping. So a trader will identify a setup on the 1 hour time frame, and then they will switch to a different time frame to either look for confluence or look to argue against why they should take that signal. And they end up not taking the signal at all, and probably most of the time trading in an opposite direction. Now, multi-time frame analysis, again, is something that you will see me do, but that's because I'm a discretionary trader. I have a mechanical strategy, and I also trade discretionarily, and that's because I'm successful. I'm doing it for a long time. People, as they start out, if you do not have a consistently profitable strategy, if you are not, if at the end of every month, you don't have more money in your trading account than when you began, you need to forget the noise. You need to forget the discretionary stuff and focus on building a mechanical strategy. That is the consistent advice that I got from successful traders when I was searching for a path forward. And that is the consistent advice that I continue to give to traders now, because I don't want to see them make the same mistakes that I made. So time frame hopping is extremely dangerous when you are a beginner or novice trader, because you will develop a bias on a lower time frame, and you will either carry that bias into the higher time frame and not look at the evidence that the higher time frame is giving you, which should supersede your lower time frame bias, or you come from the higher time frame down and retain that bias and forget the fact that lower time frames have their own dynamics. But either way, you lose sight of what your strategy is. You develop a strategy on a certain time frame. That's a mechanical strategy. So there doesn't need to be any other input from a different time frame. It's going to confuse you. It's going to mess you up. It's going to make you take more losing trades than you need to. So time frame hopping, extremely dangerous. I cover this, by the way, in full depth. You guys can go get the free guide, 5mistakes.krakencryptocurrency.com. First link in the description. Let me know what you guys think. Share it with your friends, your family, people you don't even like. Bam. And then, of course, Bitwarden Unified. This will be coming out pretty shortly, again, like I said, within the next week. All right. Other than that, that's about all I've got. We will take a brief second here. Go through the chat. Shout out, as always, to Andrew Munns. We've got Wook Chewy. So again, my advice would be, so just to reiterate, Kimozabi, this is something that can be, it's not a difficult concept, but it all comes down to this. You know, all my advice for people is if they want to improve their results. So I see people make consistent mistakes, and I've identified that not doing those things or doing things differently can get better results. So for example, if you wanted to get more fit and you were already kind of working out, and I said to you, well, hey man, if you work out like this, you're going to get better results. And let's just say that you trusted that that was true. And then you did it and you got better results. You weren't wrong with doing things the way that you were doing them before, but there's kind of a commitment that you have to make when you want to become good at something. Not only do you have to make a commitment that you want to be someplace great within a certain period of time, but you also have to commit to getting there the best way possible. Otherwise, you're doing yourself a disservice. So again, if individuals are experiencing good results with what they're currently doing, great. If individuals are not experiencing results that they want, then I recommend going back to beginnings, sticking to one time frame, sticking to a particular basket of assets, trading at the same time every day, and building a mechanical strategy. Because the multi-time frame analysis is very important for discretionary trading, but it is absolutely detrimental to mechanical trading, particularly in the beginning. All right, guys, thank you so much for joining me for another exciting episode of the Breaking Bitcoin Market Update. As always, we will return tomorrow, roughly same crypto time, definitely same crypto network. Links down in the description to everything you could possibly desire, the brand new guide, an enhanced guide, which is only $7, ways to get involved with the premium trading group if you guys would like to work directly with me in 2023 to grow and protect wealth in 2023. There's lots of ways to get involved. Again, links down in the description. If you enjoy the content, make sure to smash up the like button and subscribe. Helps propagate us through the YouTube algorithm and also lets me know that you enjoy the content and incentivizes me to continue creating it. If you guys have any questions, comments, concerns, sarcastic remarks, hot stock tips, or death threats, feel free to leave them in the comments section down below. I will see you all tomorrow. And until then, trade safely, be kind to each other, and make sure to tip your waitresses. Cheers, guys.